Hello everyone, I hope you guys are having a wonderful day and making some really good trades as per usual. Let's dive into some analysis here. So the SPY was actually still up today, up 4 basis points after I believe the VIX was up a tremendous amount yesterday. VIX actually still gapped up but sold off into the close. So you kind of saw the markets get that late day rally into the close, but it's been pretty much a neutral to choppy day. Again, market, in my opinion, is waiting for more data to come out. We got non-farm payrolls coming out on Friday and unemployment rate. So that's going to be a market mover for sure. Very important information for in order for the markets to kind of choose the direction that it wants to go in. Now, when we take a look here at the SPY chart, I've been reiterating that it's a very tough trade right now because you're trading near all-time highs. You're coiling up for a very big move. If you take a look at the Dow Jones Bollinger Bands, a big move is coming in these indices. I'm pretty sure the S&P 500 also, getting a very big tight Bollinger Band here on the daily time frame, or sorry, the 12-hour time frame. I was taking a look at the 12-hour. I think the daily though is pretty much expanded, but the 12-hour time frame contracting for a very big move here. So it should be coming at any moment. It's down about 53 basis points right now in the after hours. Not too sure what the whole spiel is. Probably some more Israel-Iran news, to be quite honest. But oil isn't really moving on that right now. The dollar, though, is on the rise. So that's an interesting tidbit to take a look at. We'll cover that in just a bit. But yeah, in terms of the SPY here, I would be, flat to negative here, in my opinion. You've had a big move up, but you could also just as likely go higher. On the job report, you could see here the RSI's just kind of chopped sideways. Still, you could still get a very big pump up on the non-farm payrolls, make a new all-time high once again. Continue to build that bearish divergence. It can go on for a long time. Trust me, it can. If you think it can't, it can. And you know what? And the market can continue to churn higher. And that's just what most people are in denial about right now, is that the market cannot go higher. It can, right? Just because you're getting all this bad economic news, yada, 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 the market can continue to rally. But you will get to that inflection point where the market won't be able to rally anymore. And you're going to get that big, deep pullback that everyone's talking about, right? So that's what I got going on for you guys on the SPY. The Q is very similar scenario to the SPY. You're looking for a scenario, something like this. Again, and it would be set up for a possible dip buy down here. Once we do correct, again, it's a very big move for that to happen. We'll take a look at the SMH real quick. So the SMH, I told you guys, it's still possible for it to turn higher here. So you got a possible wave 4 bottom. Nice cycle reset on the 45-minute. Now you need that final rally. You need that final rally in the SMH to rally basically up, I think it's like 10% now, 12% into this area. And then you would be entering the sell area for the SMH. We'll take a look at the TLT real quick. So the TLT gapped down today and made a lower low. Again, I told a lot of the members that we were exiting or bond positions early just to secure profits, because I'm getting very concerned about the bond market right now. You're starting to see possible low trying to form. I told you guys got a daily cycle break back down here, right? I think we're around this area here at 4%. We have a cycle break, retest. It's possible yields could go on the rise. And for, whatever reason, everyone's talking about yields going lower now. And, when we're up here, everyone's talking about yields going higher, and we were buying the bonds. We were buying bonds while everyone thought yields were going to continue to go higher, like for whatever reason, like a crazy reason. And now that yields have dropped significantly, now it's time to long the bonds. Now that yields have dropped, a pretty good amount on the 20-year at least, and then you got the 10-year and the 7-year and stuff like that who have dropped even more. But I'm just dumbfounded when I hear stuff like that. But yeah, I mean, it could continue higher, right? But I'm not really willing to risk it. You could still churn up and hit the sell area like I've been talking about for months. But for me, it's been a great trade. We longed at the lows, now we're selling at the highs, and I'm happy to do that. I'm happy to sell for someone else that's willing to buy it from me. So anyways, we'll take a look at a few other things as well. We'll cover, let me see here, the dollar real quick. So the dollar, I told you guys, could be either forming a significant low or it's doing an ABC correction, which I think is still possible that it could be doing that. However, it's starting to look a little bit bullish here on the DXY when you take a look at Market Cipher. And we'll take a look at the SPY chart on Market Cipher too in just a bit. But the daily is looking bullish here. The weekly time frame, you got a confirmation of a green dot low last week. This week, you're getting a green candle, possible turning point for the dollar here. And this would be bearish for gold, right? This would be bearish for gold. It would be bearish for equities. It would be bearish for the market if the dollar started to surge higher here, right? I saw that comment the other day. I'm gonna leave it up. No, I'm not gonna delete it, right? One guy thought that the dollar going up in this kind of environment would be bullish for the market. Incorrect. That is incorrect. You would be dead wrong. And right now, it's proving that the dollar rising up here is not really bullish for the market at all. You want the dollar to start crashing and continuing to go lower for the market to continue higher and churning higher. This rising probably shows me that people are getting out of the market, getting back into the dollar, and you're probably going to see maybe inflation come back or something like that, and they're going to start to pivot on their stance on cutting rates, or which I really doubt. I think now, even if inflation comes back, they won't care because they know that the economy is going to tank at any moment, and they need to cut rates, right? And they need to cut rates, and it doesn't matter what the inflation situation is. Cutting rates is the number one goal right now. So I think they can continue to cut rates, and it's possible that the yields continue to go lower, but I've exited my position, so I took my profits there. Let's take a look at some individual names. We'll take a look at Apple first. I haven't checked the Apple chart in a while, so Apple kind of getting that rejection now. Possible 1-2 setup again. You could make the case that this whole move was the X wave, but right now I'm labeling it like this, So for me, there's no real setup for Apple. It's been hitting the sell area many times now, 1, 2, and 3, and finally, is it gonna drop? We'll have to see. Let's take a look at Apple real quick on Market Cipher. Let's take a look. Let's check it out. Okay, weekly time frame, not looking too great though. You don't have much green money flow. Daily time frame, ooh, not looking good at all. Actually, you have a very big reduction in green money flow, huge decrease. You could be getting ready for a tough period in the market right now, right? If these stocks start to roll over, the mega caps, and by the way, you also have the SPY lined up very similar, like Apple, very big reduction in green money flow, about to enter the red. When we enter the red, guys, it's a tough period in the market, very volatile, and you see downwards price action. It's not to say that you can't get big bounces from when you're in red money flow. You could clearly see here, big bullish divergence, boom, green dot long. Look at that rally. I mean, 26%, like it just kept going on and on and on and on and on, right? You had like an 11% rally in 30 days. So I'm not saying that you can't get rallies, right? But you need to be cautious now and not be getting super hyper bullish, mega long to the leverage, time to go leverage to the hills and long this market because it's going to 6,000. It's not guaranteed that we're going to 6,000. There's no guarantees in this market. But I would be very cautious right now, longing. Tesla, right? We hit the sell area. I told you guys this many weeks ago. This was the sell area. You may have entered here, right? You may have entered here, right, on my call. But I told you guys I also was not getting short here. I was not getting short here, and I wasn't getting short here because I'm already in other short positions. But if you were, then this was a sell area. Now you're getting a nice rejection from it. So you should probably see some more downwards price action from here and maybe tag this area down here once the move completes. Okay. I'll delete this bullish scenario for now. And then we'll take a look at NVIDIA. So NVIDIA kind of chopping about. It made a gap down lower, but rallied on the day. I think NVIDIA ultimately needs to head down into this area, which begs the question: does the SMH have enough energy to push higher and hit that sell area like we were talking about? So I mean, we'll be patient and sit on our hands, and I'm not gonna chase or jump into anything until my levels are hit. AMD also needs to go a little bit higher, but obviously the move can end at any moment. You've technically met the minimum requirements for an ABC, and this move has corrected higher. So there you go. And you got no divergence. You already finished here with no divergence. So this move could have ended right there and then, and now you're getting ready to roll over. And is that what's happening in the markets now? Are we getting for a big drop? I mean, it's not it's not looking too hot right now. Things aren't looking too good in the markets at the moment. I don't know what's going on in the after hours, but it doesn't seem too encouraging. Let me take a look at some more stocks here. So I think we'll check out PayPal. I think I had PayPal up here. I'm always looking for PayPal. I always forget where I place it in my list. I'm pretty sure it was beside Square. There we go. I found it. Okay, so PayPal 1212 setup. Yep. So it's ready to honestly set to go higher, but we'll have to see what the market has in store for us, because if this move fails, then this could be a bigger connector for much lower prices in PayPal, and I would hate for that to happen to PayPal, because I like the company. I use it. It's used good for my business. But yeah, it would be very unfortunate if that were to happen. Let's take a look at Mara. So Mara, I told you guys, more downside. And I mean, Bitcoin got a pretty big pullback. It's at a certain area of support right now. Now it begs the question: can this level hold, and can we see more upside from here? We'll have to see. Anyways, let's continue on, and we'll take a look at a few other things. Let me just get on to I think I noticed my BLZ trade is popping off. It's up like 8% right now, so it's rallying pretty hard. That's nice to see. Let me take a look at a few other things. So we'll cover BT. No, not BTG. I want to cover the GDX today. Sorry, I got a little bit distracted. So the GDX is kind of chopping about here along with gold. Again, I would be very cautious with the miners. I'm bullish on the miners. Do not get me wrong. I am long-term very bullish on the miners. I just don't like this kind of like bearish divergence that I'm seeing on the weekly. It could be setting up for a major breakout. You already have a pretty big breakout right now on the weekly cycle. You can see you broke down from this downsloping trend line. You broke down from this downward sloping trend line on the RSI, but you've kind of chopped in and out of the resistance and support line. So this could actually fail and come back down for a bigger pullback, but set up for more upside later on. And that would come in line with like a bigger market correction. But yeah, I mean, silver to me shows more upside here. It shows more promise and more rallying needed, and that's what I think silver is going to do. Gold seems a little bit tapped out. I think it needs a bigger pullback, something like this maybe, and then rally for more upside for one last high. So that's what I see for gold. And then we'll take a look at oil. So oil continues to very, very choppy, continues to chop along here. I would not be shorting or longing this, but I still do the analysis for you guys. And this is the sell area right here for oil. But just given the geopolitical conditions right now, it's not the best trade setup. The Hang Seng, let's take a look at the HSI. Hang Seng, I think, is down on the day today. It's down 2%. It's had a tremendous rally, guys. It's had a tremendous rally. It could have peaked today. 32% in how many days? From the peak to trough? 32% in 20 days. That is an index, not a stock, but an index. Obviously, it's being pumped up with a lot of money, but I think this can still fail. This move can fail. Don't get me wrong. You may have peaked, yesterday on Wednesday, or I mean, I guess it's still today technically, but I would not be getting super bullish, super long right at this moment right now. I would be very cautious. And then we'll take a look here on wave edge. We got some red crosses on the SPY. I don't like to see that. We got them on the Dow Jones. We got them on the Nasdaq. We got them on a lot of charts here. The 12-hour time frame though has a green cross on the SPY, a green cross on the Nasdaq. Is it a dip buying opportunity? Is it a sell the rip? What is it? What are you guys gonna do? What are you planning on doing? For me, I'm swing short, but I'm more on the sidelines. I wouldn't be too super mega long, at least in the short term. For short term trades, we bought the dip today at the lows and we sold at the highs and we took our profits and now it's dumping back down. And when this market gives you a profit, and especially in these kinds of markets, you want to take the profits that's on the table and you want to store it away, put it in your pocket and run. USD continues to churn up. This will help support the market. Again, not sure if this pattern will play out. Could be setting up for a more bearish pattern, but we'll get into that if it does want to play out that way. But for now, I'm satisfied with what this pair is doing. Yeah, I mean, yeah, that's pretty much it. Don't really have much else to cover. Let's take a look at Google real quick. I know one of my friends holds Google, so Google, yeah, it could have ended right here and then. Minimum requirements met on the C leg, but for the flat to play out, you need to go a little bit higher on Google. But again, these moves don't always play out. You ended the move with no bearish divergence, and that's indicative of a C leg top. So three-wave move up, and that could be a flat for a significant amount of downside if this were to play out. And I think the target is the same. It's very, very close. It's very similar. So it's somewhere around 132 to 110. And that's where I think Google will go if we do end up rolling over. And there's lots of ifs, right? There's no guarantees, but lots of ifs. Okay, and Roku needs a little bit more downside. If this is the correct count, then Roku is $69. $69 is your dip buy area if you're bullish on Roku. I've given up on this stuff. I'm not touching it anymore. And look at those Chinese names. Like, you're just rallying like crazy. Eventually, you'll get max complacency, you'll get peak euphoria, and then you'll lose probably like a lot of the move. It will retrace a lot. And people, because right now you're getting the Jim Cramers, you're getting everyone. You gotta get in. This is the time to buy now. Like, if you're not in China, you shouldn't be a financial advisor. You shouldn't be an invest. Like, what all this shit that comes out on the news, I hate it because it entices people into making the wrong decisions and buy at the wrong times. And then when you get these massive rallies like this, they end up failing, right? And it doesn't matter how much money you throw at the problem. I mean, eventually, if you cause hyperinflation, I guess it'll solve the problem of stocks going down because they'll only go up because they'll get hyperinflated. But then you'll cause other problems there. But that's not my point. My point is this is not a healthy rally, right? But I mean, I could be wrong, and we'll see. What happened to SMCI? Oh, they did their stock split, so this fucked up all my charts now. So that's done for, and oh man, I mean, we'll have to fix this later. But as far as SMCI goes, kind of just follow the SMH and just go from there. All right, so I think that's enough for tonight, guys. Hopefully you enjoyed this analysis, and I'll continue to do it. And if you have any stocks you want to, want me to do analysis on, just leave them in the comments. I'll do them for free. Peace.